Let me record this live. Let me just repeat one more time. For yeah, I made a mistake. So coming in here, simply that this week was going down. Now I don't know if it reduces the strategy will reduce, but this pattern is displayed here and here again, and the next Monday have been the same of the 4-hour time frame. Which time frame is that bearish trend line? This which one? This one going down. This is the 4-hour, but you can read on the 1 hour. Yeah. So this right now has been invalidated. It has been invalidated. So I'm waiting for a pushback here to give us that buy up to that. That's what I'm talking about. Okay. So on Tuesday we explained this trade and now entry. Now let me just talk about the entry. Simply that. Let me talk about the entry. Now this entry was I want to see momentum coming into the market. I want to see presence of either buyers or sellers. Of course, when you're trading, buyers will always be there, sellers will always be there. But guess what? One has to be more aggressive than the other. That's always the rule. One has to be more aggressive than the other. And the one who is more aggressive drives the market to a specific direction that one seeks to follow. Again. Now, look at this. To show you that this market was steady for the buy here, just look at this. The break happened, the retest, and the W pattern. You guys saw that. So it's supposed to be dynamic. It's supposed to just look at the few. Just don't look for a lot of detail. Just look for the few details. Just focus for like 2 minutes and see what's happening around that. See the structure that has been broken, and then react accordingly. Go to the DXY for confirmations. Okay. Go to the DXY for confirmations. Come back to GBPSD or Euro USD or any pair that you're trading. If that pair has the US dollar, go to the DXY. It's the index for the dollar. It's like the strength or weakness. Once you get the DXY and you know where the market is going, it's going to be very easy for you to come back and make decisions. It's going to be very easy for you. This was like a break and a retest there. Pass by, retest again. I'm sure down here there is a divergence. You know you can spot them easily after some time. There's a divergence. There's a divergence there, just right there. Tell you that the buy was valid. Look at its divergence. Okay, that's simple. Now a divergence is just like a disagreement in the market. It's just a disagreement. Once you get a divergence, it means action is coming. Action is coming to the opposite side of where the market has been going. So you don't just trade the divergence, you come out and look for candlestick behavior. The person who asked me the question right about now in the main group. In the main group was this question was easy, right? What's value investment? I explained it. Value investment is it comes back to the value investment can be used in Forex trading. It's the cost averaging system. Or it's the way you enter your market. You get it comes back to entries. You get that is also value investing. Now let me just explain the whole thing again. You see the way a person who has been, let's see, have you guys, do you know something called benchmarking? I'm going to just repeat what I said in those voice notes. Do you know something called benchmarking? It's in economics, right? Or you've had the English term benchmarking or something like that. Now, benchmarking in equities can also be applied. You can also apply benchmarking in Bitcoin trading, in altcoin trading. You can apply benchmarking everywhere, guys. Even here in Forex trading. That's why I tell you, my strategy has been picked out. Even the way I enter, like the market, has a reason why. You get, even the way I enter the market, I have reasons why I enter the market. And if you go and make research further than that, you can just see that, okay, this aligns with their thing. But if you go on strategy chasing, you're going to waste a lot of time. The time you're supposed to use to build what you already know is the time you're wasting to learn something new. You get once you've come and you're stable and you know, okay, I'm just doing research, just research. You're going to just add on the knowledge of what you already know, guys. That's what I can tell you. I didn't me, I was lucky at first. At first when I started trading, I just jumped on like it was straight on. I just jumped on candlesticks. Candlesticks from candlesticks, I got one person strategy and started trading that. Then I later advanced it. You get I later advanced it. But remember, uh it's you, like trading is psychology. We are all born different from different families, different statuses, all that stuff. You're supposed to also come and apply it here. Okay. I have a high risk tolerance, you have a low risk tolerance. We're not going to think the same. But even though we get the same setup or analysis, the entries are going to be different. Okay. But we can all have the same style of entries, but the time of entries may matter. Okay. The time we stay in a trade matters differently. Okay. So you're supposed to know this. I can teach you my way of entry, but how sure are you that we are going to hold that trade for the same period of time? Okay. So let's go back to value investment. So literally, value investment is benchmarking is something like referencing, right? Now, it's like referencing. That's what you guys. Now, if you come back to value invest, let's just take an example of S&P 500, or what people call SPX. You get there's something called the price earning, the price earnings ratio. You get in equities. In equities, there is something called the price earning ratio. So in S&P 500, the aggregate price ratio is 23. 23. So anything below that is termed as cheaper than the market. That's for S&P 500. So what is the price earnings ratio? Price earnings ratio is divided like this. It's divided by estimated earnings per share you get in like the past 2 years. That is just the price earning ratio. So if you bring it to referencing, you reference it with other markets, you get other stock markets. You come and say that okay, uh, tech companies have a habit that most times theirs is always above. You get if you're comparing. Okay, the price earnings ratio is these are a series of numbers that are from 1 to 100, from 5 to 100. So they just bounce around in the middle there. You get just play around in the middle there. So if you go back to other the stocks of other companies, I'm driving you guys to a specific point. Yeah. If you go back to the stocks of other companies, you may find that the price earnings is 10 or 12. That may describe the value of the stock because it may be much cheaper in the market. Yes, that's in other companies. But it doesn't mean that it's bad to invest in it. You get it may just mean that the company is earning at a slow rate. Remember Amazon, let me say in 2001, no one knew that stuff. Its earnings were low. But look at it right now. You get look at it right now. So you may see it's expensive, but it doesn't mean it's expensive to invest in. That's what the difference is. I'm going to drive you guys to how it can be applied in forex trading. So doesn't mean it's expensive to invest. It just means that okay, the returns are high, like they overmake volume. That's what I mean. So I even give an example of Warren Buffett. Warren Buffett is termed as the biggest value investor in the world. Was invested in Goldman Sachs. That's in 2008. Invested in Goldman Sachs in 2008, and we had the recession in 2008. If you guys have made research, there's the bubble of real estate and mortgages and all that stuff. So invested in Goldman Sachs, and by then the investment rate was zero, but he made them pay 9%. Yeah, that was a very sharp move, meaning these people's shares were cheaper, very cheap. He bought them when they're cheap and no one was looking there. Right now they're too high. Man's made a profit. Get so you're supposed to now if you bring that whole thing that I was telling you right now, just make sure you're entering the market. Just make sure you're entering the market at a cheaper price. Look, remember on Monday when I told Ernest that Why are you selling, bro? This market has oversold. You get literally you can't just jump on the train from here. You can't do that. You can't. Unless you have a zone here and you have confluences. Why? You're going to jump in from here. You get, but you can't just jump in from here. You get. So what am I saying? Always wait for this is your discount price, right? This is your discount price. But always wait for the market to start giving you reasons why it will change. And when it changes, don't buy expensive. Wait for a cheaper price. Now here it was selling expensively because if you wanted to sell, you would have waited for a retracement, then you sell. That's what you're supposed to always do. I've ever wondered why you enter the market. Immediately you enter, the market reverses against you. You've literally bought the market expensive and it's going lower to determine cheaper prices. Then that's when it comes to your direction. Priscilla is on this call. Now let me just show her how you set stop losses, right? Let's not show me. So once you enter, once you get like an opportunity in the market and the market is going upwards and you want to buy from here, right? And gives a W pattern, and you can just take confirmation. And you enter from here. Bring your tool. This is the tool we use, the long tool. Click it here, right? Now this shows your stop loss, the red side. You can move it to below structure. And you see that this shows pips. Meaning your stop loss is 20 pips. You take this number, 1.2096, and you put it on the stop loss on MT5 or MT4. MT5, you take this number. This number is supposed to be lower than the current market initial price, spot price. Supposed to be lower. The take profit is supposed to be way higher. That's simply stop loss, right? Yeah, so I think I've explained everything to you guys. So now it's time for you guys to ask questions. Yeah? Ask any questions. Let's look at some. Guys, any questions? Any questions, guys? Oh, you guys are good. So let me just clear my chat. The reason why my chat is messy is because I leave these things for recording. So this current trend, this was a good trade because the market moved up. This is a pullback to the 61.8. Pump back, came back to give us a W pattern here. Now, where would you have entered the market? Now, you have a break, a retest here, right? Retest. Now, this is your W pattern. Your entry, we have seen that there is a divergence here. This would have been a nice trade. This would have been a nice trade for you guys. But you guys ignore the simple stuff and you go for the difficult stuff. And at the end of the day, you end up missing out on a trade. Good. You end up missing out on a trade. The DXY is selling because it has been on the range. It's now the selling side, and there would be an opportunity here. We either buy it, that's meaning selling GBPUSD, or sell it, that meaning buying GBPUSD. So the DXY move, where do you think the channel may end? The channel may end, can end here. You get, can end here, and when it does, it will give us the best opportunity. Meaning that's a break of structure, retest, change of character, and a sell. Okay, this would, if it breaks, this is the best entry we can get. This one, because we have structure break here, and right now there's an OW, the same area here. So this would have been the nice entry, but I believe it can end here, or it can come and bounce and go to the upside. Yeah, we can't say I believe, no. The market presents, we react. That's it. We react always. So guys, that's it, guys. I think there are no questions. No one is asking questions. Priscilla, any question? Or anyone? Yes, I'm getting you. I'm getting you. We are getting you. We are getting you. I think Elano is not getting us, but we are hearing you loud and clear. How do you stack trades? Stacking starts from this question is how do you stack trades? Stacking goes back to the account size you're trading. You can't stack trades yet you're trading a small account. Again, now if you're trading a small account, there's a way you can do it. You can wait for one entry to go into profit, then you move the stop loss of the first entry to break even. Then that's when you add another entry. And the stop loss of this other entry you've added has to be also above this first entry, so that the new entry is running on the profits of the first entry. But if you trading a big account, you can use the cost averaging system as lot as you want, because you're going to just keep adding on your profits. You don't enter at once like with your whole investment. You enter in portions. You enter it in portions. In portions. I always tell you, you guys, the video I've sent you guys is just the tip of the iceberg of cost averaging. There are so many styles you can learn of cost averaging. Okay. The cost averaging is this. Let me show you. This is an uptrend, right? This is how cost averaging works. You initially miss, you entered, you feared risking a lot from here. So you enter from there. Hey, let me make this. Let me delete this. So you enter from here. Some entries, not your whole investment. Then when it goes into profit and you see it pulling back, you add another investment. If it's in profit, you add another one. Like that. That is cost averaging. But only that when you're stacking, can stack in bunches. You can enter first bunch here, second bunch of like 5 more entries, third bunch of 3 entries, fourth bunch of 2 entries. So you have to just keep advancing. There are so many styles you can use it at. Yeah. So you're supposed to know that. Again, you're supposed to know that when you're trading. Okay. How far with our strategy of using the other figures? No. First leave that, guys. Because I know Herod now is making money. He wants to now get a new challenge, but let's just hold on a little bit. Let's just hold on a little bit. Yeah. At least me and Herod have come, I think, since last year. Herod, is it last year? Last year, October, November. All this year. The Herod has been here since, has been some good months now. So now he's looking for a new challenge. So speak about free margin. Free margin is the percentage that you're left with to be able to open a new trade. You get that is margin. You it shows you how much you're able to open a new trade. That's why when you're trading, you're supposed to literally look at your um the initial capital, the initial balance, because it's what shows that is left in your account, whether in profit or losses. So the margin keeps on reducing or increasing depending if you're in profit or losses. And it shows your ability to be able to enter more positions according to the leverage or account size it shows. Yeah. So in cost averaging, how you can use it is that okay, what I would advise you guys to do, you can do cost averaging when the market is going against you, but I want you guys to start like that. You just for now just keep it to when you're in profit. Cost averaging can work. The example when the market is in losses is this. You get Okay. Ah, let me just get it. Maybe you expected this market to buy from here, right? Then it dips, but you still expect it to what? To buy. Let's just end around there. So literally you wanted to buy from here. So the market buys, then it goes against you. You just take it to the downside and add more positions there. And add more positions. Though you don't add so much, like a lot, just add a little, just a little. Because now the market is going against you. You have to just add a little so that when it reverses, you have an opportunity to add more positions to the profit side. So when you enter initially here, let's say your lot size was 0.5 and you enter 0.10, and it goes against you, right? Meaning you still have 0.4 to enter. Don't enter 0.4 here down. Just enter 0.05, 0.05 because it's against you. You're trying to recover this market. It's risky though, it's risky, very risky. So, any more questions? The girls are, the ladies are silent. They're just there, silent. There are two on this call, very silent. They may not even be here. Hi guys, there. So just put on open Telegram, put on the live, and go and do that stuff. Hi guys, there. Bro. Okay, so guys, I think that's it for today. I think that's it for today. Any questions? I will call it a night. I've spent 30 minutes there. So I think there are no questions. Allow me end this. Thank you for being here, listening to me. Listening to me. Okay.